good afternoon, everybody. Just as a way of intro, my name is Glenn Bellamy. I am a partner at Withum and the practice leader of our consumer products niche. Thank you all for attending our webinar on the PPP loan forgiveness process. What an amazing and complex journey we've all been through to get to this point of the PPP loan process. For about, I would say 4 solid months, we were sending out daily emails, Dan and his group, and having multiple webinars to keep our clients, our associates, and friends of the firm updated on the constant changes with the SBA and PPP loan process. And boy, they were many, right, Dan? There were a lot of FAQs and a lot of changes.
Yep, sure were.
At Withum, we ended up setting up a task force of well over 15 people to become experts on the crazy complex rules and regulations associated with the program. The head of that task force is Dan Mayo, who is our presenter today. Without Dan, we'd go crazy. I mean, he really is very knowledgeable of the law. So Dan has a law degree and is a tax principal with the firm. And really, at this point, we'll discuss the forgiveness phase of the program. Also, part of our panel is Terry Moncrief, who's a partner at the firm and is team leader of our food and beverage group. And we also have Alana Danowski, who is a marketing associate, part of the niche as well. So that being said, I'm going to pass it on to Dan to talk about the PPP loan forgiveness phase and what needs to be done. And once again, if you have questions, feel free to write them in our Q&A section and we'll address every question that you guys have. So thank you.
Great, thanks, Len. So we're going to talk today about PPP and the loan forgiveness. I figure we'll talk for around 15, 20 minutes, and then we'll open it up to Q&A. Certainly, I'll address them along the way if they come in sooner. I thought I'd start with a quick overview, though, just to give some stats, let everyone, reminding everyone where we were and where we are. CARES Act was passed at the end of March, on 27th. It allowed for the PPP. The PPP didn't exist prior to March 27th. Application process was opened by the SBA on April 3rd, and it ran out of money shortly thereafter on April 16th. It was refunded again April 24th. June 5th, the program was expanded with new legislation, that PPP Flexibility Act. It's greatly expanded the ability to get forgiveness by bringing in that 24-week covered period, lowering the old 75-25 rule to 60-40 rule, brought in new headcount reduction, safe harbors, and many other rules. On July 4th, the deadline was extended to apply for a PPP loan to August 8th. With that, obviously, that is now passed. The process is closed. Now we're solely into forgiveness. About 5.2 million loans were issued. And you see here on the slide deck, we linked to the report. And I think to a lot of the forms as well on the slide. So if you click through on them, it'll take you right to the Treasury website with all these documents there. Most of the loans, as you can see, 87% are under 150,000. So they did target small business, and 95% of the loans are under 350,000. On August 10th is when the SBA started accepting loan forgiveness applications from lenders, although many lenders have not completed their own portals and still are not accepting applications. Many are. We've heard also that the SBA has issued loan forgiveness to some taxpayers. They have, so the lenders had said yes, the SBA said yes, and the borrower has full forgiveness already. That's happened in some cases, but other borrowers are stuck saying, how come my lender's not open? And so that's something we're still hearing, even for some of the large national lenders. On the forgiveness application side, there's now 3 applications as of last month. There were 2 prior to that. You have the long form application. This is the default application for all borrowers. Unless you can use one of the other 2 forms, either the EZ or the simplified form, you have to use this default application. This is sort of the more complex of the applications because it requires you to complete Schedule A in the worksheet. And that's where you have the FTE, full-time equivalent, and which are the headcount reductions and also the wage reduction calculations. The second form is the loan forgiveness form 3508EZ. Again, it's linked here, so you'll take you right to the Treasury website. You can download it. There's also a set of instructions for all 3 of these forms on the website. The EZ form, though, is a form for administrative convenience. The SBA allows borrowers to use it as long as they can certify they meet one of three options in order to qualify: either no employees, or no change in headcount or wages, or the business hasn't returned to the prior, to what it was before February 15th of 2020. So that the key there is that you have to meet one of those certifications, and if you don't meet them, which is that what's helpful about this form is you don't have any FTE or wage reduction calculation. So it really is helpful to use this, but if you can't make one of those certifications, you can't use this form. And that's what we're seeing, though, is most of the all of the restaurants should be able to use this form, right? Because their business was shut down in some measure during the pandemic. Although most are up and running at some limited capacity. Some are doing better because of takeout, but most, if not all, restaurants and hotels, movie theaters, etc., businesses that were shut down should be able to use the EZ form, which makes life simpler because they don't need to do FTE and wage reduction calculations. So that's going to be very helpful for a lot of people. Finally, we have this last application form, the 3508S for Simplified, that came out on October 8th. This is for loans of $50,000 or less. And what the SBA said in this case is there's no numbers on this form. It's just a series of, you check the box to make sure you're representing that you basically complied with the loan in all material respects. And the SBA said the headcount and wage reductions do not apply. They won't even consider them. So no calculations need to be done. It's just a de minimis wholesale exemption. And so this will affect about 3.5 million of the 5.2 million loans issued. And that affects around 62 billion of the 525 billion in PPP loans that were issued. So you have three options here on the application. You're going to want to use the simplified if you can. If you're 50,000 or less, you're going to use the simplified, very easy, no numbers. If you can't use that, you're down to the long form and the EZ. Your decision tree is you look at the EZ. If you can make one of those three representations, you make that, you're in the EZ form. If not, then you default to that 3508, the long form with the Schedule A and the worksheet, and you do the calculations. All forms, though, do require the submission of supporting documents, documentation to support the fact that you spent the payroll appropriately, spent the funds on payroll and overhead expenses, even the Form 3508S. And finally, I mentioned here on the slide that most borrowers we're seeing are able to get full forgiveness just based on payroll. So we're seeing many borrowers not bother to collect the rent, the water, utilities, electric, that kind of thing. They're not even bothering with those expenses because the payroll is enough. Now that we have 24 weeks of payroll, borrowers can use that. They get full forgiveness based on payroll. They're finding it's not worth the effort to hunt down all those little overhead payments when it's just additive, and it's not necessary to get 100% forgiveness. Also, what we're seeing, we have many clients who've already submitted their applications. Every borrower we've seen so far has been getting full forgiveness, and we expect that most people should get full forgiveness. So if you're not getting full forgiveness, it's either a mistake or there's some reason for it that you must have had massive headcount or wage reductions to bring you to that point. But absent that, and there are safe harbors. So even with headcount and wage reductions, hopefully you can take advantage of a safe harbor, which brings you back into full forgiveness. So that's at least what we're seeing with our client base. In terms of the decision, the way it works is the borrower applies to the lender. The lender has 60 days to render a decision to the SBA. And then the SBA has 90 days to consider it. The SBA gives a decision back to the lender then tells the borrower. The SBA made it a little simpler for the lender recently in the last month or so when they said that the lenders only need to confirm up the expenses paid up to the loan amount. So if you have $1 million loan amount, but the borrower spent $2 million, the lender only needs to confirm the $1 million of expenses up to $1 million, then they can stop. Tell the SBA this borrower should get full forgiveness. So it does simplify the loan review process. We're trying to make it quicker and easier for lenders to get these approved, recognizing that if there's 5.2 million loans, that's a lot of applications that need to be processed within the next year. Principal and interest payments are obviously suspended on the loan. And the way it works here is that people, a lot of times we get the question, is there an end date, an application we must apply by a certain date or you don't get forgiveness? There's not. Practically speaking, the date by which borrowers have to submit their application is 10 months after the end of the covered period. And the reason for that is that's when the loan starts becoming repayable. So if a borrower does not apply for forgiveness within 10 months after the end of the covered period, so if we call it 10 months from October and November, then the lender will contact the borrower and set forth a payment schedule to repay the loan over the remaining period of the 2 or 5 year loan, depending on if it was renegotiated to extend it to 5 years. Most have a 2-year loan period. So you're going to want to get that application in. Many of our clients have already submitted the application. If people haven't submitted it, they're in the process of submitting it. We expect that at least half, if not more than the borrowers, will have submitted their loan forgiveness applications by year end. So you really want to get yours in. There's no rush, of course. You can wait to submit it till February, March. There's no rush to get it in per se, but we find the psychology of most clients is they want to get it in and over with, get their decision as fast as possible. A lot of our clients rely on payroll reports they get from their payroll provider or PEO, and there's ADP. There's many of these organizations that are out there. These reports are not always accurate, so borrowers need to be careful when they rely on these reports. Many of them have subtle, if not major, inaccuracies, even ones from the large national organizations. And so the two common issues I'll present here. One is that the FTE calculation for the wage reduction rule is oftentimes incorrect. And it's not that they're making a mistake in the calculation, it's that they don't have complete data. So if the payroll company has data on 8 weeks of a person working, they'll accurately calculate that, but they don't have the data on when the person was not working. So they don't calculate, it's an average weekly calculation over the entire covered period. So they oftentimes don't have the data to give an accurate calculation there. The second thing are the earnings codes. And so earnings codes, you have to include the right earnings codes to capture the right amount of payroll. And so if they include a wrong code, like a mileage reimbursement, you're going to get the wrong number. Similarly, if they fail to include a code like an overtime code, you're not going to have the full payroll, because payroll does include overtime. It includes bonuses, severance. There's many things. So that when we see employers that have many payroll codes, they oftentimes that's where we see a mistake. So that the more payroll codes a particular company has, the more likely it is that there's going to be some kind of error on the payroll report, although it may not be significant. Again, if the borrower is getting 100% forgiveness, the fact that one code was missed may not make a material difference. So, we are just, some borrowers are going it alone if they are, and they're not having, an accounting firm or someone review it on their behalf. Be sensitive to the fact that you can't just accept the data from your payroll provider and assume it's 100% accurate. Next thing is these large loans of $2 million or more. Has dramatically changed in the last few weeks, the burden on them. So we knew that loans of $2 million or more were going to be reviewed for eligibility and for forgiveness. The SBA stated that. And so the reason they're looking at them for eligibility in particular is that FAQ 31, right? That's that famous FAQ. It's been written about 1 million times since it came out. I'd say about, 3 months ago, 4 months ago. The borrower, when they signed their loan application, must have had a good faith basis to say that current economic conditions made the loan necessary to support its ongoing operations. And so loans under 2 million are deemed to meet that standard. So it's not an issue for the under 2 million crowd, only the 2+ million crowd. And so no one knew what the SBA was going to look at to examine this. Many borrowers, with the help of us and their other lawyers and whoever their advisors are, have come up with a written summary of the facts that existed as a loan application date in order to document their uncertainty as of that time. Recognizing that memories fade and people come and go, leave companies, and they may not have the institutional knowledge there when the SBA audits them, either as part of their loan forgiveness application or years later. Because the SBA can come back for up to 6 years after the loan forgiveness decision is made and request your documentation and audit borrowers for eligibility and forgiveness. So the 2+ million crowd, New forms started circulating in late October. It's not clear if these are the final forms or they're going to modify them. They have not been posted to the Treasury or SBA websites, but I have linked to them here. We have them posted up on our Withum website. 3509 is for for-profit borrowers, and 3510 is for nonprofit borrowers. And these two forms really ask for a lot of information that goes beyond the loan application date, which is not what was believed. The SBA has said numerous times, and general principles say that when you make a representation on a document, right, a legal document, it's only made as of the date you're signing the document. And so any fact that happens after that date is really not relevant to your good faith and state of mind as the date you signed it. But that's what the SBA is asking for here. They're asking for significant information to assess the business activity and liquidity of the borrower, again, for these $2+ million loans. So some of the things on the business activity side, they're looking for, second quarter revenue, 2020 versus 2019. They want to know how the borrower was affected by shutdown orders, how they had to alter their operations as a result of it. And this next question is the first of the many troubling ones. Did the borrower begin any capital improvements between March 13th and the end of its covered period? Right. The question suggests that if a borrower made capital improvements during its covered period, that perhaps it didn't need the loan. And so that's not what they're saying. This is not a substantive change in the rules governing the PPP. It's an information gathering document. So it's not clear that, the goalposts are moving, but they are asking for the information, which is what's causing a lot of concern in the borrower community. And finally, there's a catch-all question for any other information. So if a borrower wants to highlight any information relevant to any of the questions in that section, they can do that in this catch-all request. And this is where we're telling borrowers, use this opportunity to craft a response that puts your company in the most favorable light. And so this is your opportunity to sort of, make your best first impression with the SBA when they review your loan forgiveness application by highlighting any key information that shows how you were impacted and why you had a good faith belief as of the application date that your business was going to be impacted by the pandemic. On the liquidity side of things, you see here they're looking for cash and cash equivalents on hand at the end of March. But here they want to know if the borrower paid any dividends or distributions between March 13th, the end of its covered period. Did it prepay, not just pay, but prepay any outstanding debt, meaning payments before they were contractually due. Also, were any of the owners or employees paid more than $250,000 a year on an annualized basis? So you can see where they're going with this. They're trying to get a sense of, was this loan really necessary for the borrower? Because if it prepaid its debt and it made dividend distributions and paid healthy salaries to its owners and employees, perhaps it didn't need the money. Again, this is not the tests. We think, again, I'm just speculating here, that the SBA is just trying to create a full picture of the borrower so they can decide who to go after, who not to go after in terms of eligibility. And the more of these things that they start seeing, that don't look good for the borrower, the harder it's going to be for them to believe that there was really uncertainty at the time of the loan application date, right? And so you get a sense from these questions what the SBA is looking at, what they care about, and who they might consider going after. Many companies, the restaurant industry, for example, was shut down. Revenue's down 50%, for example, and you anticipated that because you were shut down for a while. It's not likely they're going to come attack a restaurant, even if sales picked up at a later point in time, and now they're doing better than they were before the pandemic. The point is, at the time they signed that loan application, the current economic conditions were brutal, and they fully expected things to be bad. The fact that they turned them around doesn't disqualify them from this, from the eligibility for the loan, or impact the good faith nature of the representation that was made. And so there's also a catch-all in this liquidity assessment. They want to know if other CARES Act funds were received. And then there's a catch-all where borrowers can put their best foot forward. The responses to this form, the 3509, the 3510, are due within 10 days of receipt. And we have some of our clients have already received these forms from their bank, or lender, I should say, not all banks. And so what we're advising all of our clients now is to start complete. If you If you have a loan, 2+ million, start completing this form now so you can gather all the data and have time to look at it, craft your responses to those catch-all questions, and make sure that you put your best foot forward. So when the form does come from your lender, you'll be ready to go. You'll have everything prepared. You'll have time to share it with upper management in the company and make sure you have input from your advisors as well. So, completing the form now is we think well spent time. We also understand that the AICPA and other organizations are submitting comments to the SBA about this form, saying that it solicits improper information, and anything after the loan application date should be irrelevant to the representation that was made as of the loan application date. And the last thing I want to mention here is a district court case that came out on November 5th last week. And this case can have a big impact on the privacy concerns of all PPP borrowers and EIDL, that economic injury disaster loan borrowers. The case said that the 5 news organizations had sued the SBA, asking for the names and the exact loan amounts of every borrower under the PPP. The SBA resisted that because saying they'd already disclosed information back in July, the aggregated data for loans under 150, then they bucketed everyone over 150 by loan amounts. They disclosed the names and the addresses, but not the loan amount. They only disclosed a range. So example, 1 to 2 million, 2 to 5 million, 5 to 10 million. The district court, the judge said in this 40-page opinion, and again, it's linked here in the slides, that the SBA must disclose the name and exact loan amounts. The court rejected the SBA's argument that it's confidential information. It's based on the payroll and you're revealing the payroll. The court, at length explained why they rejected that argument, why they didn't believe it, and why they ordered them to make these disclosures. So I don't know if the case is going up on appeal, but borrowers should expect their loan amounts to be made public in the near future unless this case is reversed on appeal. Well, economic injury disaster loans are out there. I'm not going to spend too much time on them. These are loans that were obtained directly from the SBA. They're not forgivable loans like the PPP. They were more restrictive in that they could only be used for working capital expenses. The key thing here for the PPP is that if you received a grant, an EIDL grant, which is not repayable, that will be deducted from your loan forgiveness amount on the PPP loan. So you don't actually do that calculation. You just ask for 100% forgiveness of your PPP loan, and the SBA will automatically reduce your loan forgiveness amount by that 10,000 or less, whatever the amount of your grant was, when they give you the loan forgiveness decision. So if a borrower did receive a grant, say of 10,000 from the EIDL, they will not get full loan forgiveness on the PPP. They will get full loan forgiveness minus that grant, the amount of the grant. So they will have to repay some amount to their lender, which is exactly the amount of the grant that they received from the SBA if they got an EIDL advance, which is what they call it. But it's really a grant. And that grant is taxable just like the PPP. Just go on for a few more minutes here on tax, and then we'll open it up. I see some questions are coming in. When a borrower receives a PPP loan, there's no tax consequences. But when the loan is forgiven, generally speaking, that would have been taxable, but the CARES Act specifically says it's tax-free. So there's no issue with the loan forgiveness and that cancellation of debt income. But what the CARES Act did not address is the expense side of the equation. The IRS did, though, in a notice 2020-32. The IRS mandates expense disallowance for all expenses that are related to loan forgiveness, but they did not address timing. An article came out just today in Tax Notes today. For those of you any tax people on the phone, it's a tax publication that comes out daily. There's an article, someone at the IRS said they expect to produce guidance on this timing point by the end of the year, perhaps by the end of November. They realize it affects obviously over 5 million borrowers. It's a big issue. At Withum, we've been telling people that if you accept the reasoning in the IRS notice, then expense disallowance occurs in 2020, not 2021, even if the loan forgiveness decision is not received until 21. As long as the borrower has a reasonable expectation of getting forgiveness, the amount of that forgiveness will give rise to expense disallowance. So this may change legislatively because there is a push in Congress to eliminate reverse the IRS position and make the expenses fully deductible, which many legislators have said was the intent of the legislation. And that makes sense given the way the statute was written. But the point here is there's two things. One is the IRS is going to issue guidance on the timing, and two, this issue may go away if Congress steps in. The HEROES Act, for example, had a provision making it tax-free. So if that part of the HEROES Act comes in, it's possible this issue goes away because everyone can deduct the expenses. Absent any change in law, we expect that most borrowers will be including this income in 2020 and should plan on that when they file their tax returns and estimated tax payments. In terms of PPP, there is the second version of a PPP is being discussed. It's likely to come in some form if there's another stimulus package, coming through, not budget, stimulus bill. The Republicans are resisting it now that a vaccine is out. Democrats have asked for this and other items. So who knows? No one knows who can predict what will come through the legislative process, but it is a more restrictive version, the second PPP, if it comes in, at least the version that's currently under consideration or proposed by the Democrats. They would limit the borrower to limit it to borrowers of 200 employees as opposed to 500 in the first round. Borrowers must have suffered a 25% reduction in gross revenue in the first 3 quarters of 2020 versus the same quarter of 2019. That's a new requirement that was not a requirement in the prior PPP. Loan size is still 250%, 2.5 months, right, of payroll. But they capped the loans out at 2 million instead of 10 million. And then there's other changes, minor changes about eligibility. You can include PPE costs up to part of the overhead and things like that. So that covers sort of the main presentation. I guess we can open it to questions. I see some questions have come in on the chat function. Are the slides, they sent out after the presentation? I assume they will. Alana, is that right?
Yeah, I'll send them to Jess after the presentation for her to share.
Perfect, thank you. So that it's absolutely everybody can see those links that we put in there and get the documents if they want them. Any other questions? Alana, anything from Facebook or?
I haven't seen anything come through Facebook yet. Looks like there aren't any more questions in the chat, so please feel free to put them in the chat. I don't know if you guys want to just discuss quickly some frequently asked questions you receive.
The questions I get, Glenn, I'll ask you in a minute too as well, Terry, if you guys want to please jump in. Is there an incentive to applying early? Is there a reason I should go early? The answer is no. We don't see a reason for people to go early. They can if they want. I would say your own psychology is the biggest motivator. If you want to get it over with, go early. Most people's covered period is over with at this point. So it's just a matter of preference when you want to get it done. It shouldn't affect the expense disallowance determination. So if you reasonably expect forgiveness, according to the IRS, your deductions will be denied in 2020, even if you don't apply until 2021, right? They don't want to give people that electivity to choose when to make this thing taxable just by simply deferring their decision to apply to the SBA. But I expect that'll be addressed in the guidance that comes out within the next month.
Hey, Dan, looks like there was a question about will the state piggyback the Fed with respect to the deductibility of the expenses?
So I can't answer that question. There's 50 states. They all have the right to assert their own view of taxation. Some are piggybacking, we know that, and so I don't have a good sense of I don't have a survey of the 50 states. I know on our website, on the Withum website, we do have a state and local map that includes a lot of this information, so I would expect that to be on there. A question came in: if an individual chooses to retire, does that count as a reduction? No, it does not. That would be a voluntary reduction in hours or voluntary termination. That does not count against an employer for the FTE calculation. So that's one of the exceptions on the headcount reduction rules.
Yeah, and I've had a couple clients ask the question relative to if they met the dollar amount to get forgiven within that 8-week period as opposed to the 24-week period. Is there an advantage or disadvantage to preparing this application based on that initial 8-week period?
So if you're getting full forgiveness, right? We talked about this recently. If someone's getting full forgiveness, it's not a forgiveness benefit, right? If you're getting In other words, if you're not getting full forgiveness on 8 weeks, but you will on 24 weeks, it would be a mistake to apply using an 8-week period. If there's a reason for some other government benefits that you only want to attribute 8 weeks of wages to the forgiveness, then it makes sense to use an 8-week covered period. But absent that, we're not seeing a reason for for widespread people to use 8 weeks over versus 24 weeks.
Dan, there was another good question here about the R&D credit. Does the non-deductibility of the payroll cost affect the R&D credit, since they go hand in hand, the R&D credit and the payroll cost? I don't know if we've dug that.
Yeah, I haven't considered that before. It's the first time hearing this particular question, although we've gotten to the point with the PPP now where it's been so long, I've started to forget the questions that we get. But I don't know. The R&D deduction, let's say a taxpayer takes the R&D deduction, it doesn't affect the PPP. I know that. The question is whether the PPP affects the R&D credit. And so I don't have an answer to that. I don't know if it does.
Okay.
Another question came in here about the new second PPP. If the new plan comes out, will it affect people who didn't apply yet, or can anyone meeting the criteria apply? Again, we don't know because the new PPP program is not out yet. We don't know the terms of it. We know what's been proposed. What we expect to happen is that you can, if a taxpayer is eligible for a second PPP, they can apply for and receive that PPP independent of the first one. So even if they haven't applied for forgiveness yet, they'll be able to get a second PPP. That's what we expect to be the case. They're two separate programs. They should operate independently of one another. And the fact that someone got around to applying or not should not be one of the fair criteria for eligibility for the second round of the PPP. Another question came in here from, let's see, I'm a sole proprietor with a small loan, less than 20,000. If I apply, is it in? So if you're a sole proprietor, there's special rules, tax rules for partners and sole proprietors. The income is actually tax-free for them, and this is a quirk in the taxability here, because the way that the reason it's taxable for a C Corp borrower, we'll take a big company for example, it's not the forgiveness that makes it taxable; it's the expense disallowance. When you get Schedule C filers and partners, there's no expense to disallow. They receive the income, which comes in tax-free, and they're just passing that through to themselves. It's allocated to them. So there is no taxability for Schedule C filers and for general partners. I wrote an article about this, which lays it out in more detail. It is, if you type in my name, Withum, taxability, PPP, some combination of those words. I wrote a fairly comprehensive article about the taxation of the PPP, and I walked through that difference, why Schedule C and general partners are not subject to tax on the PPP loan amount. But that may be fixed. If Congress comes in, they may repeal it for everybody else as well.
And there's a good question here about how to treat the forgiveness income on your financial statements. So I know you're a tax guy, so I'll take that question.
Okay.
So generally speaking, the income would not be recognized until the debt is forgiven. So if you filed your application in 20 and before you wrapped up your financial statements and the loan was forgiven at 21, you would go back and say that that's income in 20. There is a rule change now too, that you can adopt, it's more of a government grant situation. So if you wanted to, you could, consider that income. If you believe that your loan will be forgiven, you can consider that to be income in 2020 considered it as a government grant. So you have the option really to, one, include it as income if you choose to do so. If you don't want to choose to do that, you can also wait until 21 when it's forgiven to include it in the 21 financial statements.
Yes, that's a good point, Glenn. There's a loan model and there's a grant model. The loan model is more conservative in that there's no income recognized in 2020. It's in 2021 when the forgiveness comes, if assuming it comes then. And the grant model is slightly less conservative in that you're taking some income or all of it into account in 2020 if there's a reasonable expectation, or right, if it's probable that you'll get loan forgiveness.
Correct.
Another question came in here from someone named Anonymous Attendee. It says, any insight into how the EIDL grant is still being referred to as a grant when clearly they have to pay it back? Yeah. So this is getting at the difference between the grant and the loan. So the EIDL loan has to be paid back over a 30-year term. That's clear. But separate from the loan, when borrowers applied, they were eligible for the grant, which they call the EIDL advance. And that's separate from the loan. It was a payment up, it was $1,000 per employee, the maximum of $10,000. They're out of money now with these grants, so they're not making them anymore presently, unless they're refunded. But that is separate from the loan, and the grant clearly is not repayable, and it also is subject to tax at the federal level. So if you get a $10,000 grant, you will have to pay tax on that amount. I don't see any more questions here in the Q&A.
Yeah,
Anything in the chat feature? I don't have access to that.
Yeah, nothing
No,
came through.
Nothing new there.
Okay.
Dan, it looks like there's one question about, are there requirements surrounding which covered period you have to use, 8 versus 24?
Yeah, there is no requirement. You can use 8 or 24. That was more of the distinction was more relevant when people wanted to apply early, when they wanted to apply. But now that we're in, mid-November, most people's covered period is over at this point, right? Most people got their loan in April, some in early May. If you got your loan in April, just say May 1st, for example, you have May, June, July, August, September, October. The end of October is when your covered period was up. So most people's covered period is up. It's more a function of how much payroll data you want to collect. If you had headcount reductions after the 8-week period, you might be better off using an 8-week period. Might be simpler. It's just a matter of assessing an individual applicant. You can use either one. You can use an 8 or a 24-week covered period. If you're not getting full forgiveness on one, you run the math on the other, right? But in general, there's no restriction on which one you can use.
Looks like we got another question. On the interest that is currently deferred, if the loan becomes fully forgiven, would the accrued interest be taxable as a cancellation of debt?
That is a very good question, and I don't think I've ever seen that one before, but that's a good point. Everybody assumes that that's part of the loan forgiveness, and it is the debt. It is part of the debt forgiveness. So it should be tax-free is the answer. When you do the loan forgiveness application, you don't even include the interest. Interest is just automatic. It follows forgiveness. So if you receive 100% forgiveness, you'll pay 0 interest. If you receive 50% forgiveness, they will charge interest on the 1% piece. But the forgiveness generally includes the interest as well. So it would not be subject to tax. The way the CARES Act was worded, did I put it in here? Let me check. Yeah, they say right here is Act. Section 1106 provides that any amount that would be includable on the forgiveness of a loan shall be excluded from gross income. So that would include the interest. If they forgave the interest, that would have been taxable, but that would be excluded here. So everything should be excludable from under the CARES Act. Great question though. The one I hadn't got before.
Dan, I have a quick question. And you may have mentioned this before, maybe I was nodded off there for a second, but have you seen any forgiveness loans yet from the SBA?
I personally haven't. Someone in Withum, we have someone talked to a bank, I shouldn't say bank, a lender, about 3 days ago, and they told them, or last Friday rather, that they had 2 instances of loan forgiveness, and we had someone else report that they had heard of a 3rd instance. So we know it's happening.
Okay.
I personally haven't had a client receive forgiveness yet, but it is occurring. The SBA acknowledged having received, I think, 90,000 applications about a month and a half ago. Presumably those have been forgiven by now. So we're not seeing mass reports in the press about it, but it is happening.
Okay.
Decisions are being made. You know, obviously the pace will pick up in the coming weeks and months, but you know, it takes time. I think that it'll be slower in the beginning, and as they get a proficiency at processing these applications, it should speed up.
Great.
We're also telling people it will not take the full 150 days, and obviously it hasn't for some borrowers. You know, the bank is 60 days, the SBA is 90 days. We expect that the vast majority of applications will be processed within, you know, 60, 90 days. The reason they have those longer time periods is probably for the 2+ million crowd. The SBA has said they're going to audit them before the forgiveness decision is made. I don't know that they're going to have, I think there's 52,000 loans in that category. I don't know that they're going to have the manpower to audit every one of them before that 150-day period. And again, the SBA only has 90 days. So depending on how, you know, how quickly those loans come in and if they're bunched together, that the SBA may be constrained and have to just approve some of them and then go back and audit them after the fact and go do the review. So they said they're going to review all $2+ million loans. That we expect them to be a slower process. The ones that I've heard of were approved were all under 2 million. I'm certain of that. So we haven't heard of any 2+ million loan being approved yet.